Let me welcome on board our experts on the show and figure out what is it that they're making of the trading day so far. We've got Naresh Mirani as well as Deven Choksey joining in the show right now. Naresh, hi, afternoon. Let me start off with you first. Very, very quiet today. Is it only for a dash upwards, or do you sense some fatigue setting in at an index level?
So it's been a very slow move. So it almost seems like a fatigue move, but the trend has still been positive. So till the correction or a break below 25,000 to start with, we assume that the trend is still up. Overall, the price action is still very slow across the board, but the trend is still up. If we start seeing some contribution coming in from some of the heavyweights, we could just continue. So for now, I would let the price be a confirmation, then to look at 12 days of an uptake or 14 days of an uptake. For now, the trend is still up.
Okay, trend still up. Deven, hi, afternoon. What is it that you're feeling about the market? Is it showing any signs of a fatigue? I mean, when you look at some of the individual high HNI concentrated names and the kind of fall that they've had from their previous peak, some of them are down even 30 odd % or so. What's the feeling that you're getting about the market right now?
So overall, Aisha, good afternoon. Overall, I think the market direction is very, very clear. Anything which is available at a valuation, comfortable discounted valuation, as I call it as, I think the market is not waiting for latching onto that kind of an opportunity. So obviously, I think the important aspect here would be to buy on dips. That's very, very clear and obvious. Now, where the actions are being centered at this point of time, our understanding is that majority of the interest continues to remain in the BFSI space. Uh, till now as well, I think the larger focus is on the insurance space. And whenever I think the opportunity is available in the insurance companies, definitely I think the buying is emerging into them. At the same time, I think the selective opportunities are also there in the metal commodity space, where I think larger amount of buying interest has been generated because of the fact that the input cost is coming down, and at the same time, I think the commodity prices are relatively fetching better realization for the manufacturers. So I guess I think that's also another area where majority of the interest is lined up. Yeah, I agree that I think some part of the IT and pharma, it is slightly looking tired. Maybe I think they have had the run, which is possibly the reason for which they are currently undergoing some amount of quiet movement on the counters. But maybe one will find opportunities if market gives correction, one will find opportunities at lower levels even in that space too.
Wanted to understand what your observation is when it comes to the IPO market specifically, and especially after Sebi, revealing their study, which finds about 54% of IPO shares allotted to retail shareholders were sold within a week's time. I mean, the main board IPOs that they analyzed in a good 144 public issues found that flipping was highly prevalent amongst them, and I think almost about 70% booked out within a year's time.
Yeah, and why not? I think if your market is so generous, giving such a handsome rate of return in IPO after IPO, typically those investors who are buying with the IPO and selling it out, I think they're having maximum number of rotations opportunity in the course of the year. Even assuming that out of 10, in 8 you succeed and 2 you don't. And still, I think there are class of people, including within the fund investment, that they want to play around with the IPO opportunities. So yes, I think currently the market is systematically chasing companies which are hitting the new segment, the IPO market. In my understanding, I think the flow in the entire IPO system, to an extent, I think it has been addressed, which means I think the funding of the IPO has been stopped. But still, in the individual account, I think the funding is possible. So as a result of which, I think the traders who are applying for the IPO, they use the individual accounts for applying the funding, etc. In my viewpoint, I think the other flow in the entire IPO segment is that probably we have created too many segmentations, institutional segmentation, HNI segmentation, retail segmentation. I think ultimately they need to make it fungible. And the way in which IPO should be conducted on a first come first basis on the trading screen, direct allotment. If that situation comes in, then probably I think the current level of whatever misuse, as we call it as, which is happening in the system, will probably go on.
Well, holding out quiet, at least for the benchmark index. Other than that, of course, it's a comfortable spot. There's Hero MotoCorp. Now they're looking to debut into electric three-wheeler space. So that stock, of course, has been a buzzer today. There's Gujarat Gas after their tearaway run yesterday, after them announcing that they're looking to merge their subsidiaries into the parent company. And now JP Morgan has also come out with a note maintaining their underweight, though, with the target price of 457. Today, it's a little somber after that runaway move in the stock price yesterday. JP Morgan believes that reorganization is only going to increase their exposure to commodity prices and that gas prices are expected to remain soft for now. Pharma names, of course, holding out very well. You've got a Sun Pharma, Cipla, Gland Pharma. All of these stocks are very, very smartly scaling up in trade. Gland, of course, has partnered. Market share trend was very, very encouraging for them with gains across the large products category. The July data, the official July data, indicates very positive traction in the US generic sales. So that's really auguring well for some of these pharma stocks. But we've got Aditya Arora as well joining in on the show to talk about what his technical thoughts are on the market right now. Aditya, where is it that you're finding leadership on both ends? That's strength as well as weakness in the market. Any segment of stocks or particular sectors?
Very good afternoon. Look, I think there are a lot of sectors where distribution is clearly visible. For example, auto, we are already hearing that there's inventory pile up. And even if you look at the international markets, then auto majors are trading at 52-week low. And in Indian market also, since last few days there's sluggishness in top auto companies. Every good news is also being sold into. We have seen very a lot of good news in this sector, but that got sold into, and there's no robust price action over there. So that is one pocket. Second pocket is capital goods. Again, in capital goods, you're seeing the same kind of price action wherein, there's hardly any movement. And if there's any up move, and that is getting sold into. And we have seen about 5 to 20% correction in these counters in capital goods space, and even in auto we have seen about 5 to 15% correction in auto counters. And third one is defense, which everyone on the street knows that it's pretty overvalued. It's consensus view that it's overvalued, but still there's sluggish action over there, and I think there's more space for downside. So clearly these three space investors can get very good price somewhere down the line. I think good correction is possible in these three pockets. And the sector which I like is FMCG. We have seen good leadership from ITC since last few days, where market is lacking proper direction and proper leadership. ITC is continuously inching up, and even when market was declining, that was holding on. So I like ITC from FMCG basket, and I think there's scope for outperformance in FMCG sector.
Okay, fair enough. I wanted to also get in your take then on what the outlook is on some of these defense counters. By the way, just pull up some of those stocks as well. And let's quickly check in on how they're trending in trade today. Do remember they have got the government approval for the 26,000 crore rupee aero engine deal. And this is perhaps a push in the direction for Make in India that the government has very well closely been looking at. So the likes of a Mazgaon Dock, a Cochin Shipyard, Garden Reach Shipbuilders, L&T, etc., all expected to gain on the back of this. Aditya, curious to understand how you're looking at this on the charts, and then Deven, I'll get in a take from you on the fundamentals as well.
True. So in Mazgaon Dock, we have seen a stellar rally. The kind of returns it has delivered it's phenomenal. But somewhere the stock will take some time to consolidate the gains. From lows of 2023, Masgaw has gone from 350 odd levels to 6,000. So I think this is the right time where scope for outperformance is very unlikely, and stock will soon mean revert. We have already seen correction from 6,000 odd levels to 4,600. There could be short term bounce in the counter, but in medium term, I see this counter inching towards its important moving average, which is placed around 3,700, 3,800. So that eventually turns out to be a time wise correction and price wise correction in Masgaw Dock. And second one is Cochin Shipyard. Similar kind of price action we have seen in this counter stock ran away from 250 odd levels to 2,800. And from there, we have seen a lot of distribution at the higher levels and significant price action, good volumes. So that suggests that a lot of smart hands distributed the counter at the higher levels. So I don't see scope for outperformance in this counter for pretty decent time. So I think big money wouldn't be made in these defense counters. One should wait for lower levels. Probably there the risk reward would be better.
Okay, now let's get in the fundamental take. Deven, your view on defense stocks and what this news potentially means?
Yeah, well, I guess I think the price correction has happened, but still the valuation rationalization has not happened. On one side, I think it's even if we assume that I think 20-30% kind of a price correction has happened, still both these companies are quoting between 40 to 60 times price earning ratio on a trailing 12-month basis. Even if I take factor into account 15 to 20% kind of a growth 1 year forward, still I guess I think the valuation is not quite decent. I guess I think it is expensive even at this point of time unless you see the larger amount of execution happening and generating better amount of profit and the growth in the profit. I don't think that I think immediately the valuation is going to get corrected. uh, to me, I think more or less I understand that I think it is going to be a time correction more than the price correction now, at least for the time being. So one will have to wait and see how exactly it pans out. But yes, I think it would be a I think good amount of the time correction that we'll have to see in this context.
Okay, fair enough. That's the view coming in on that entire cluster of stocks in trade. Meantime, what have been your key takeaways, Deven, from the auto sales numbers that have come in? Because at best, it's been in line with what the street was expecting. No real fireworks here. So, what's the outlook on auto?
Remains, I think, positive. I agree that I think in this quarter, which is generally the case also, that ahead of festival season, couple of months are soft months, and at this point of time, even the inventory is higher. So good time for the buyers. According to me, I think if the higher amount of inventory and the larger amount of discount is made available to the buyer, it's going to be a good time. And this may be, I think, a temporary phenomena at the same time, because overall the demand scenario is not getting affected. On the contrary, disposable income in the hands of people increasing. And if the rate of interest starts coming down, then possibility of I think you seeing the pickup in the demand eventually could be on a higher side. So maybe I think 1 or 2 quarters of slow uptick in the auto space for the time being. Maybe by the end of the third quarter or fourth quarter beginning, you should be seeing a reasonably steady to better outlook coming in for particularly for passenger vehicles. I think the commercial vehicles and the two-wheelers, they are relatively different. Two-wheeler demand scenario continues to remain upbeat. New generation of vehicles, including the flex fuel, which is now being in demand, particularly in the CNG side of Bajaj motorcycles, and electric vehicles, I think scooters, they are all basically driving the new level of growth for two-wheelers. And commercial vehicles, I think we remain distinctly bullish about because of the prospects involved in higher amount of expenditure happening in the economy and infrastructure side and also by the industry. So the commercial vehicle two-wheelers, I think we remain relatively more sure. Passenger vehicles, maybe you should be seeing the recovery from the fourth quarter onwards.
Quite interesting. Naresh, where is it that you're seeing fatigue or, still further strength on the auto charts across the board?
So in auto, we've started seeing fatigue in a lot of names. But after a pause, so for example, if you look at Bajaj Auto, it took a pause for the last few months and then again started. So the longer term trend is still up for most of the names. So Tata Motors is showing a lot of fatigue around that 1100, 1150 mark, has not been able to cross in a major way. TVS Motors, for example, did make a new high, but did not see a large momentum as such. On the other hand, Eicher Motors is one which looks promising out of the whole auto pack. It has been testing that 5,000, 5,050 mark. So that could be the new one in the auto pack, which could do better. And that could take the lead. Hero MotoCorp also went through a phase of consolidation for the last couple of months. Has seen volumes in the last 3 days. But out of all the names, there is a pause in majority. But Eicher Motors is the one which could break out.
Okay, let's take some closing strategies as well then on that note. Naresh, you only go first.
So that would be a buy on SBI Cards, which after a long time consolidation for a long period of time today has given a breakout, has been seeing volatility. So closer to this 760 odd mark is a good entry point for the stock, which could go towards 800 in the short term.
Right. Okay, let's take a very quick break then on that note. Deven, we'll let you go on that note. Thanks as always for joining in and chatting with us.
If you like this video, then like, share and subscribe to ET Now.